Hi, everyone. My name is Serena Mohan. I am the Director of Public Programming and Events for the Preservation Resource Center. I want to thank you all for being here for this class. We've been doing these classes 3 times a week while everyone's stuck at home, covering a wide variety of historic preservation topics. And we are so glad that so many people have been interested in tuning in and learning more about preservation. So thank you. I also see that there are a number of members in our audience. Thank you to our members. You guys are what keep us going. You keep preservation going, but you also, your support and your membership is what keeps the Preservation Resource Center going. So thank you to our members. If you're not a member yet, please consider becoming a member. We love new people to join us in our mission of preserving historic New Orleans architecture and neighborhoods. And we would love to have you. You also get with your membership home delivery of our incredible award-winning magazine, Preservation in Print. So please, if you join today, you'll get the June issue in your box next month. We also have incredible merchandise available. Visit prcno.org to check out our new t-shirts and our incredible coffee table book. I would also like to give a shout out today to Stephen Richard Parnes, who is sponsoring our online classes. He is an amazing supporter of the PRC, and he is making this possible. We're going to keep it going through this month at least, and doing free online programming for you guys. So thank you, Stephen, for your support. If anyone else out there is interested in supporting this programming and helping us continue to do it, please reach out to Katie Fayard, who's our development director. You can reach her. You can see her email on the screen, kfayard@prcno.org. She would be happy to talk to you about sponsoring our online classes or supporting any of the other work that the PRC is doing during this time. So a few issues of logistics. If you are joining us through the Zoom webinar platform, you'll notice that you don't have video or a mic, so you're sort of muted, but you're present. We do want to hear from you. If you have questions, please do ask. There is a Q&A button at the bottom of your screen, so type your questions in there. If we don't, I'll be moderating and asking the questions of Becky, making sure that we keep things going. If I don't ask your question right away, I'll probably get to it later. There'll be time for Q&A toward the end of the session. Just be patient with us. We'll get to all of your questions. If you're having technical difficulties, feel free to send me a message in the chat function and I can try to help you through it. I've been learning a lot more about Zoom as we do all of this, so I can try to help you walk through any technical difficulties. If you are watching us on Facebook, thank you for joining us this way. If you have questions, the best way to do it is through Zoom. But obviously the PRC is here to be a resource. So reach out to us, let us know what your questions are. If we can't answer you today in real time, still let us know what your questions are. We can either answer them or get you in touch with the right professionals who can answer your preservation questions and your questions about this very important tool in the preservation world that Becky Lambert is going to talk to us about today. Becky is the program administrator for the Restoration Tax Abatement program with the Louisiana Economic Development. And so she's an expert on this. She's going to really talk to us about the nuts and bolts of the program. So without further ado, I'm going to turn this over to Becky. Becky, give me 1 second and I will let you share your screen. Okay, Becky, you can go ahead and share your PowerPoint, and the stage is yours.
Let's see where it is. Well, oh, there it is. Okay. Hello, everyone. So happy to see you in sort of a digital world. I actually don't see you, but I will be speaking with you today about preserving cucumbers and tomatoes. Oh, wait, that's the other one for tomorrow. No. This is regarding the Restoration Tax Abatement Program, and I thank Sarah for giving me the opportunity to speak on behalf of the state of Louisiana, Louisiana Economic Development, the Business Incentives Division, that allows us to help companies and individual homeowners to receive property tax abatement on the improvements they make to eligible structures. And let me ask you a little housekeeping right here. Should I be seen or should just the presentation be seen right now?
You're fine right now. If you're comfortable, we can see you.
Okay,
You
that's
just
fine
can't
with
see
me.
yourself.
Okay, that's fine with me. So if anyone has any problems with me speaking loud enough or clear enough, please, let us know so we can make this the right experience for you. And if you do need any preserving recipes, let me know. I'll try to get those out to you. All right, so first question, and you can just kind of think about this, but has anyone used the Restoration Tax Abatement Program for any projects in the past? And it doesn't really have to be a verbal answer, but I ask that because if you have, you're ahead of the game for a lot of people who have missed the boat because they learn about it after they've done the project. And that's the after they've done a project and they haven't notified the state of what they want to do is one of those too bad, so sad. There is no going back and recreating it, changing the start date or anything. Once a project has completed and then the other portion of that is on the tax rolls, there is no going back to get a benefit for the period for a contract period. So the most important thing is to make sure that you learn enough to be able to ask more questions, and you'll have my number, and I'm going to suggest a few other numbers for your local resources, including Sarah, um, because it's us on the ground that are helping you. I am the state program administrator, but we also have another state administrator for another program that I don't manage, but I will tell you about her. And then there are the people on the ground in Orleans Parish. And if you aren't already aware, Orleans Parish has the vast number of applications for this program, far greater than any other parish around. East Baton Rouge Parish and Shreveport are distant seconds and thirds. So Orleans, by the nature of the fact of the eligibility uh, areas, you have a lot of geography in Orleans that is qualified. So, and again, and if you don't know if you are or not, I'll give you the resource to that as well. So thank you again for coming today, and I'll get started telling you about the program. And I really have just a few slides because I really want to focus on the things that I know. Oh, I should have said I've been working with this program for over 10 years. I have 25 years experience working in economic development for the state as a project manager for major business projects, and then of course working with these incentive programs, and I've worked with a number of them also. So I have experience, but I have a lot to learn. There's always something new to learn, and any sharing of tips that anyone wants to provide me to share on, to pass on, I'm open. But anyway, the purpose of the program, and I'm gonna use my glasses a little bit, is actually to provide property tax abatements, and abatement means not paying, for the expansion, restoration, improvement, and development of existing commercial structures and or owner-occupied residences. Existing, I can give you, I have a lot of examples throughout this. Just last week, someone was so proud to provide me with an advance notification, which I'll talk about in a minute as the first document that is submitted to, the first step that's submitted. Was so proud in the project description to say that we have just completed rebuilding a new blah blah on a site that had a decayed building, and now we're going to revitalize this area. Few words in there just threw the whole thing out. There is no abatement available for new buildings for this program. It has to be improving what's existing. Okay, and there are four critical sections in that: expansion, restoration, improvement, and development. You may have and I'm going to elaborate on those just a little bit, and they're almost self-explanatory, but expansion means you might have 1,000-foot building and you add a couple of rooms to it and you end up with a 1,500 square foot building. that's an expansion. Without doing a whole lot more, you're expanding, you may be putting a few more offices or bedrooms or whatever. Restoring goes into the historic preservation portion because you're going to a lot of times try to restore to its original purpose and original style. And improvement is making is sometimes this is not a repair program, such as if you had a hurricane and you had damages to your roof and some of your shingles and columns and things, other damages happened. That's repair. That is not that is not this program. Yes, you may be doing some repairs overall when you get into the project, but this is not a repair program. So if you do a building permit and it describes it as that, repair of blah blah, I will have to question that and question that with you and say, are you doing any type of expansion, restoration? Redevelopment is the fourth one. The redevelopment is taking um, the old bone Ford dealership and turning it into a high level residences and anything else. They can convert it to something else, all the warehouses that have become something different. So that's it. These are the qualifying districts of the Restoration Tax Abatement Program. And just recently, back in July of last year, one of the districts was expanded to include something, and I'm going to go into each one. The Downtown Development District is pretty clear and understand there are boundaries. The city, the parish is fully aware of exactly where the start and end borders are in the city for the Downtown Development District. There's usually a Downtown Development District Commission and board, et cetera. And then, yes, of course, we know there is one in New Orleans. But they are very instrumental in helping you to know what their requirements are with downtown development. But it does qualify you. I don't care if the building was erected 2 years ago. It can be a new building, but it cannot be an unbuilt building at the time of the application. But so in the Downtown Development District or an Economic Development District, and that is created by the City Council, or as it says in the statutes, the local governing authority. So anytime you read that and you hear local governing authority, that's who it is. That is the body that votes on what's happening in their district or their parish. The Economic Development District can literally be carved out of an area that is not currently an eligible district in order to stimulate economic development activity. And that could be to open up at the port, to open up an area for expanded business opportunities and some vacant space along there, that has, many warehouses, whatever they use. They can revitalize an area. They also have opportunity zones. And economic development, an opportunity zone does not have to be voted on by the board, but we, or by the authority, but it's kind of added into the Economic Development District eligibility. And if you don't know what that is, and I'm not an expert on this, but it is a federal program for investors to receive a benefit back for the investment they make. And you can apply for opportunity zones, and I'm going to leave it at that because I don't want to profess to know more about it, but you can. That's why I didn't even put a link to it, because there could be different links and I could be missing the one that you really need to know. But you can go right online and enter in opportunity zones, and you can get a resource listing of things to tell you. But any of you who are investors or knowing or representing investors will more than likely know about this legislation that passed last year. Any units, any applications received after then can qualify for an opportunity zone after the July 1 regular session. And then the last one is the historic district, and this includes properties that are in the historic districts of the city, or the property is not necessarily in a historic district, but the building itself is historic in nature, and you've applied or it's listed on the National Register of Historic Places. And the little byline underneath, I say, contact Allison Saunders. She's in another department within the state with the Department of Culture, Recreation, and Tourism. She has been working as the director of this department and is directly involved with the preservation and historic preservation programs that they have. She has actually spoken with Serena and me a couple times at your location explaining the program. But it is a rebate program, or a percentage, about 20%, I think it is, or 25% of your investment on the qualified investment you can get back. Unlike the Restoration Tax Abatement program, it's not a refund or credit to your taxes. It's actually not being assessed the value, the tax value on that investment portion. So it's saving money definitely, but this one with historic preservation actually puts money back in your pocket that you spent to do the project. But if any of you know about the historic nature of improvements, it can be very tedious and daunting and sometimes disappointing when you can't find the right knobs that they say that you have to have.
Becky, let me interject for 1 second. We actually did one of these online classes with some tax credit professionals. So if anyone is interested in learning more about that, if you don't have this information yet, you can go to our website, prcno.org, and view the recording of that class. It is definitely something the PRC is going to continue to try to disseminate information about. So we do have a little bit more information about that. If anyone has any questions about it, feel free to email me anytime.
Okay, that's good. Thank you very much. There's so many examples that can come up that it's hard to list everything, but and you said the website and stuff. We have a wonderful website. You would go to louisianaeconomicdevelopment.com and select the incentives tab. And from that, you scroll down and you find Restoration Tax Abatement. And we have more details about all the statutes about the program are there. You know, if it's a little bit cumbersome to work with, not having worked with the specific programs, that's what I'm here for. I can help you through any part of the process that you need to be able to get started to submit your documents. Okay, eligibility, and we have talked a little bit about it, but I'm going to go over a little bit. It requires.
Sorry, Becky, before you start that, we had a question about location. Someone was wondering if properties in cultural districts are eligible.
Very good question. Thank you. And the arts district, anything that could be, anything called a district isn't necessarily an eligible district for this program. In fact, the framed map behind Serena is a map of a lot of the geographic boundaries of the downtown area. And the Mayor's Office of Economic Development uses an expanded version of that, and they have it sort of in colors to where you can see the different types of districts. And anytime an applicant or a potential applicant is looking to use this program, they can be referred to Tracy Jackson, who is the local me. I mean, she manages the RTA program on the ground, and she prepares all applications and the steps an individual has to take in order to participate in the program. And the first one is submitting an advance notification. The second portion of that phase is submitting an application. Just giving you a heads up on that. I'm going to talk a little bit more on that in a few minutes. Okay, so, but I have Tracy's phone number if anybody wants it conveniently. Her number is 504-658-4955. 504-658-4955, and her name is Tracy Jackson in the Mayor's Office of Economic Development. And while you're writing, I'll give you another name of Lisa Ross, L-I-S-A, Ross, R-O-S-S, at the same 504-658-1324. 504-658-1324. for. Lisa is the real estate appraiser in the assessor's office who works directly with restoration tax abatement questions and evaluating things. Okay, so um, that's what I have Tracy. She's in New Orleans. A contract is valid for 5 years with an option to renew for 5 years. That option is subject to local governing authority approval. And the local governing authority has guidelines regarding the Restoration Tax Abatement Program that are set by the City Council. Tracy Jackson has them, and when an applicant submits an advance notification as the first step, Tracy then begins her process of steps to be able to get all of the required documentation and information and payments that they need on the local level. Because what you have to provide for the state is in the statutes. What you have to provide to the city is within their guidelines of the council for, managing things. Um, I'm trying to think. Oh, for one thing, equal opportunity contractors. They have to meet those guidelines of equal opportunity, or they don't qualify by the locals. Now, how would a company know that? They go and submit an advance notification to the state. I don't know that they don't have a contractor. So there's a little bit of a gap there where there's an uncertainty, and I always encourage everyone to contact your local person, which would in this case would be Tracy, to find out, number one, if you're in a qualified district, and any other questions you have that would, or if you would qualify because of the type of business or whatever you're doing. And I'll get a little bit more in detail about some of their exceptions. If we have transfers of ownership available, a company can sell the property to a new owner, and the contract, if still active, can remain in place until the life of the contract expires. But the city may not allow the transfer if it's not meeting the guidelines of ownership. Like, for instance, a restaurant selling to a restaurant selling to an amusement park, or converting something into something else, turning a beauty salon into a restaurant. They will more than likely not approve it. Within the guidelines, they don't want to do that. Now, there are some exceptions for existing businesses that have already used the program, and they're in the second phase of renewal. But those are the types of little idiosyncrasies that you really need to know. Tracy, even if you don't apply right now, Tracy can send you the couple of sheet guidelines, and you can see right away if there'll be an obvious roadblock for you. Fees are non-refundable, so I try to make you aware of everything that I can, and I have no problem with you calling me or sending me an email. My contact information is on the last page of this. That's what my job is, to make sure that I make it as smooth as possible for you to get the benefits that you're applying for. So I said there are 2 steps. There's an advance notification, and that is $250, whether you're a business or a residential applicant. That is basically a notice to the state, and also, because it's public record, to anyone who's a contractor or anything else, so that they can look for business opportunities. So you put in, but it's also notifying the state. It's a timestamp. For instance, Becky, we're going to do a project, and we're going to start in September 15th, and it's going to go for, and the period is up to 24 months, but it could be one day if you're just building a doghouse, I guess. But it's going to, you're going to give me parameters to start and stop a construction period. And so you submit the information, and then after a little while you find out you haven't submitted anything yet. Then you call me back and say, oh, I'm wrong. They already started construction, and it started a month ago. So I need to change the date. We need to back the date up. No go. And this is all electronic in this database. Whatever the current day's date is the soonest that your construction can begin. Anything that happened prior to then, you have to determine, first of all, if it even is construction. But if it is, the expenses that you have, if it is, you're not able to use that portion of the amount that you've invested as part of your investment. You're not going to get an abatement on that. So then you have to look at your investment and say, how much of my investment is within this correct time period? I started to think of something and I'll get back to it. Okay. I've had several instances where buildings, as you know, in New Orleans, if you're a commercial building, you could be connected to uh, the building next to you, either as a firewall or just connected. There was a church near in the Marigny that became an event center, and they had a church, they had the priest living quarters, they had an outside kitchen. There were 4 different buildings. Well, the only thing that was, oh, and when they applied, it was one project to them. They bought the property and they were, redeveloping it into something else. But the buildings were not attached except for the church to the priest house. And I'm not saying it correctly. But so it was connected by an existing walkway. Those 2 buildings were able to be claimed, be applied for together. The other 2 buildings, the outside kitchen, and I don't remember the name of the other building, but those 2 had to be applied for separately. And as it ended up being, they found out that the investment in one of them was very minimal, and they would not have probably received the benefits that they wanted that would have been greater than what they were paying to make a separate application. But that's one simple example. No matter whether you call it Project ABC, if you have an apartment unit, a complex that has 8 separate units, and it may have 24 apartments per building, each building is a separate application. Okay, I had 23 houses in East Baton Rouge Parish. That was all part of their improvement project in the mid-city area in Baton Rouge, a revitalizing effort, that each one had a separate application. It still was a benefit to them. But, they said, well, why can't we do it all together? It's the same owner, it's the same this. It's because the rules say that way. And so, that's the way it works. And if you have questions about that, I'm more than happy to look at it and see if there's something that we're missing or something I can help with. And I think I said this earlier, if property taxes were paid on the improvements, the tax abatement is not available. The rules say application needs to be filed before construction begins. That application can be interpreted as the first step of the application process, which is the advance notification. Because the rules say an advance must be filed prior to beginning the project, and then a slight word change says an application is due before construction begins. In some programs, that works well because they have enough time in between and they get to apply for the program after it's been completed. Because of local governing authority requirement to be involved in improving, they need to approve the project as quickly up front as possible. But because you submitted an advance notification, the date on that advance will carry you through into the application. And typically, if the assessor, who also has access to the database and stuff, if the assessor knows that an advance notification has been filed, they will more than likely not put that property on your tax bill for the improvements that you say you're going to make estimated on the advance notification. But if you don't submit the advance, and even if it's before, you're not untimely, you still have time to do it. But if during your tax year, you get your tax bill, and because nobody knows any different, you would have 2 choices: to pay the bill and not apply, or pay under protest and ask for, or ask for deferment. But that is between you and the assessor's office. So just make sure that as soon the key is, as soon as you know you're going to do a project that might benefit from tax incentives with this program, that's when you apply. Now you have up to 2 years to do the project, but if you end up having to change the date, then you will make the change on, the start and end date. And when I started to say we'll change the date. A few years ago, we went 100% into a new database called Fastlane. We did some online submissions of the advance notification, and some programs were more advanced than others. But now all of our primary incentive programs are on the website, and they are applied by um, the individual applicant or a consultant to the applicant, and they are submitted online, paid online, and signed online with e-signatures. It was a big learning curve for some, and many times people that are residential owners may only apply for this one time for that purpose. But there are companies that have different properties, and they may be doing these programs more than one time. And consultants, some of them make their livings on applying and managing tax incentive programs for companies. And so they get really familiar with how they have to process. So if you're any one of those and want to know how to uh, set yourself up with a profile and set up the application, this would be a whole new class for me to teach how to use Fastlane. And I'd probably miss half of it because there's all kinds of little things to it. But I try to save everyone any money that I can for uncertainty. So that's why I appreciate Serena allowing me to speak today. The next step of the first of the process in applying is the application. For personal residences that are lived in by the owner, there is no minimum fee. So depending on the size of your investment, if it's a $40,000 or a $4 million investment, and it's a calculation, your fee is based on the calculation and not a minimum. On the other hand, businesses have a minimum $500 fee, up to 15,000. Okay, so I have not. It's not been unusual that I've seen a $71 application fee for a property. It just depends. It's based on the millage rate, the investment amount, the number of 5 years, and a few things. So, and once it's rated with a factor number of 0.005, we calculate it all out. And it comes out to your fee. Okay, and again, remember, fees are non-refundable. So ask your questions up front before you submit it. And sometimes it gets a little bit frustrating if someone is just not reading a little bit online. But I'm the first one to admit I didn't design the program. I had input in some of the wording of how to explain the program, but there are some places where people don't understand a few things about how to manage the application or how to get to a certain stage. I've learned enough about it to try to do some troubleshooting, and I think it will be satisfactory. If you need me, I think you'll get by with it pretty easily. Okay, contracts can be transferred, like I said, to a new owner for the remainder of the period if approved by the locals. And owner-occupied residences are allowed if improvements are at least 25% of the assessed value. I'm going to give you an example of that because someone said, "Oh my goodness, well we've already torn down. We had to do a whole lot. We had decay. We had this, and we're redesigning, and we only have I don't know if we have at least 25% of remaining in the assessed value." An example of what happened with something with them using the percentage was and help remind me the name. Was it Barnes and Noble, Serena? Was it Barnes and Noble on St. Charles near Truro? It used to be a
Uh,
funeral home.
it was you're talking about the funeral home that became a bookstore that's now the Fresh
Right.
Market?
Correct. Now it's a Fresh Market. But when the funeral home was bought by an investor to build a bookstore, uh, they said they were going to tear it down to the ground. And some smart person in the city government said, wait, I think we need to find out about how this program works. And fortunately, they did in time. They literally tore down the whole interior of the building and only left the exterior, the majority, I mean, all of the exterior walls, some interior, but the facade, the outside walls, and the foundation. And it was determined by the assessor's office that they had met the 25% rule. So they were able to get property tax abatement for 5 years, and they were able to renew. And they, because they sold to another company, they ended up transferring the ownership. So it was a win for the city because it was, a revitalization of that area. And I know that a lot of people like the grocer there as well. Okay. And by the way, the Sanger has used this and many other prominent large companies. But what I love especially is when residents can do a lot to their homes and get the benefit of it. I've said a bunch of these things, but the advance notification, as I said, and the application, they're kind of together. Um, you submit online, the application is reviewed by me, and then it is transmitted electronically to the local governing authority for review for additional local requirements and for city council vote to provide a resolution in support of the project or not. And the resolution comes from the city council after they have the applicant has met the terms locally. And once I get a resolution, it is my trigger to set up your application for the Board of Commerce and Industry to vote on it and approve a contract. A contract is then electronically prepared and transmitted to the applicant representative, who is the business signatory of the contract or of the application. So one person within the company or one person that's a private owner who can sign legal documents. And because you may have someone representing you to apply and stuff, they can apply, but they can't sign for you. So a contract will go out to that person, and then once the signatory signs, it goes through another part of the process all the way to the governor's office. And although there's not a strict requirement for, the governor's office gets it today and in 7 days they have to release it. Sometimes, and especially in light of this COVID-19, things get delayed unexpected. But if anytime someone is expecting to get the contract in order to verify to their investors or to avoid paying additional taxes or anything, we can confirm that it has been approved by the Board of Commerce and Industry and that we're waiting for the the final stages of the actual signed contract. So that's, and so you have a contract for 5 years, and from that period, I missed one thing telling you about. The benefit that you receive is property tax abatement on the improvements only. So your tax bill is still going to come, and there are two portions to a tax bill. There's the structure or improvement section, and then there's a land section. So you're taxed on both. Land is never abatable. So that portion of your tax bill is going to continue to be billed. And if there are any increases during this period of time when the land value would be changed, you can have an increase in value of the land assessment during this period. But property, the building or structure improvements, those are all the same intertwining words. The amount that you were assessed the year before construction begins is the amount that will stay for 5 years, and if renewal happens, for another 5 years. And you will only be taxed on what the amount was at that period. Otherwise, there's no benefit if they keep raising it up. So I've had several times when people said, well, my tax bill went up because, yes, it happened to have been a land assessment year, and I have nothing to do with any of that. But once they understood, then it was clear. So I wanted to make sure you understood about that. Then there are two two other documents that are addendums to the contract, and they are the affidavit of final cost and the project completion report. They are typically filed after the contract is signed, but depending on timing, these documents can actually be sent in anytime the project is completed. The affidavit of final cost tells us the actual final investment cost versus the estimated amount that you made on the advance notification or the application. The project completion report gives us the actual start and end construction dates. Before that, again, it was estimated. This actual date these actual dates gives me and then the assessor the knowledge of when the project actually took place and to determine if it met the parameters of 24 months or less, and also for the year that your property tax exemption will start. Because with Orleans starting with their tax year starting August 1st, in most cases, the next year after August 1st is when the abatement will start. Okay. Then there's a renewal. The renewal can be filed up to 6 months before or 6 months after the current rules and statutes say that. So we legally try to give every benefit of doubt. So when a contract's getting ready to expire July 31st, 2024, an applicant can submit a renewal online, pay the $250 fee, and let's see, 6 months before, so that would be, I think, January 1st, I think, the year before. So, you have, or February 1st, excuse me. 6 months before, 6 months after, you have no problems. Okay. I think I just have, yes, that's my contact information there. But I'm open to any questions that I can answer for anyone regarding your particular investment. Don't make me go to that preservation page.
So, Becky, we do have a question. Someone would love to get a little bit more information from you about, they're saying because the projects require DBE participation and a living wage payroll certification from the contractor, it can sometimes be difficult for smaller projects or individual homeowners to utilize this. Can you talk to people a little bit about those particular requirements and how that type of certification works, what's required of participants in the program with regard to those particular requirements?
I have some limitations about what I can, explain, because it's handled right. It's based on federal guidelines, and it's the way the local government allows, um, these projects to take place. I have seen some disappointments in some individuals who did not understand this disadvantaged businesses thing. Um, if you can verify or validate that you can't use them because of the specific nature of the expertise that's needed, or the product that's needed, there is an opportunity to explain and to request an exception and stuff. But the state does not get involved with local governing authority determinations. Your best asset is um, Tracy Jackson. She's the one that she's a lovely lady to work with. She's a real asset to the community, as well as Lisa Ross. But Tracy has been working with the RTA program a couple years longer than me. So we have a good working relationship, and I try to make sure that she's aware of any questions a company has or an individual homeowner has, if there seems to be, a possibility of them not qualifying, and try to connect them that way. But I can't really help as much as I'd like to on the disadvantaged part. I think it's my own opinion. I think it's a little difficult to meet sometimes, but it's the way that the city does it. and permits. I had someone just send me one today saying, my application is ready, I've submitted it, and as soon as the parish opens up the permit office, I'll get you the permit. Well, guess what? It's not ready. And, I can make a note, I can note to, uh, I can contact the assessor, but really every assessor knows that's going on. I said, the permit office. Everyone knows that they've had to delay some scheduling. Excuse me. I thought I'd shut that off. But I would just, whatever contact you can make by email. Most people are working. I'm working remotely. Most people are working remotely from at least someone in those offices, and I would contact. Oh, I want to go back to the construction, the start of construction. Construction defined is when there's a change to the structure. When the structure when there's building beginning. Demolition is not construction. Discovery is not construction, and nor are legal services getting to that point, such as architectural design, whatever else. My point about that is that sometimes people think that they've missed the boat by not filing on time, when in fact they've got a little leverage there when they can actually determine whether or not it actually qualified as construction. So, you can even look up definitions of what is construction versus, demolition or whatever. But Orleans Parish actually helped me to know about that when I first started with this program. And that saved several companies from not being able to apply because they had learned about it later than, they wanted to. But so anyway, just make sure that it's actual construction and not preparing to construct. Also, on sites, only buildings are considered part of an investment. Only the improvements to the buildings and or anything that goes to improve the building. For instance, you might have plumbing that goes outside of the building, but the purpose of the plumbing is to give you plumbing in the building. But if you have landscaping, if you have lighting in the parking lot, or you pour blacktop for your parking lot, anything that is not attached to the building and is not an integral part of the building is not considered part of the investment that you're making for the benefit of property tax abatement. And make sure that when you're estimating your investment, that you think about it. You don't, even though you may get a tax break on what you spent up front, a tax break on what you spent, realize that if you're adding into your investment that you bought styrofoam cups and whatever's for your work crew, you don't want to be paying property taxes on that after the contract expires because you've decided it was part of the investment. Anything that you would have as value of your home for property tax assessment is the same thing. You don't want to be charged. And also for what is considered building and machinery, there's hardly any, machinery and equipment. There are 3 sections on the application that ask you for an amount to equal out the total estimated investment. And one is building and machinery and equipment, only for manufacturers who actually have a production line, and they may have to bring in equipment that has to be secured to the foundation or things like that aren't going to be, you're not going to take a copier with them and go somewhere. If it's not movable and it's part of the structure, then it's considered machinery and equipment. In most cases, you're not going to have that with a residential, even if it's an HVAC or an elevator or anything that seems to be big equipment, even if it's renting equipment, that's all part of your building materials, because that will come up when you're trying to figure out what to do. And the other is on the jobs. We ask you to put the number of the existing jobs, if you're a business, and the payroll, the annual payroll for that. And then we ask you for the new jobs that are created directly by the company that's applying, for the benefit of that structure, not by um, if you're building a multi-retail unit or a mixed-use unit, it's not the total number of new jobs you're going to have throughout the whole building for different companies. It's relating to the specific purpose of that application. Okay, that gets confusing sometimes. But because there are confusing questions and stuff, we have a method to give you an opportunity to apply. And if there's something that needs to be questioned, I'll send you something called an information required email from Fastlane. And it allows you to respond and make changes. And this is a very uh, transparent type of program because it makes the applicant understand. I mean, the applicant has control of the information that they're entering, and sometimes a lot of the information regarding data and stuff, I don't have any control over changing things. The applicant has to make the changes. And so that's a big difference between the manual method and the electronic method. There's more interaction between all parties. Okay. So I kind of scattered myself a little bit at the end when I think I missed a few things. I kind of keep a little outline to myself, but just when I think I've got it all covered and I'll say, oh, doggone, I forgot about that. So if you need anything, have any questions that you'd like to talk
We actually do have another question that just came in. Someone is interested in learning a little bit more about properties where they may have been gutted. So they're asking if interior demolition or gutting is considered preparing to construct.
That is considered preparing to construct. And because you're really not building back, you're tearing down. So, I'm sure there could be some kind of circumstance that would be considered construction. If while you're tearing down, I'll give you an example. I flooded in 2016 and I did what a lot of people did. I broke down a couple of walls. Well, that I was making improvements while I was repairing, renovating, doing everything together. But that's just an example. Things can be, you can have dual things. Like I had construction going on when I was also doing demolition because after they started construction, I said, hey, would y'all mind telling me what we could do with this? So if part of your plans in the beginning, and they had to do all the clean out and all that time that was involved with that, and God bless America, it's over. But that was all pre-construction. So that might help you some.
Great. One more question in the same vein. This person's asking if a house has already been gutted, but all of the exterior finishes are intact, could it still be eligible for the program?
Well, what are you wanting to improve? What are you doing? You said it's been gutted, so that means you're ready for construction. And if you're ready for construction, you have to put your start date when construction is. Did the start date did construction start before today? If it did, then you would put today's date, May 4th, May 4th as your first day of construction because the Fastlane program will not let you predate. So it will only allow you to put May 4th or beyond. So that would be your first day of construction, if I understood your question.
Great. I don't see any more questions right now. So if anyone has them, send them now. Otherwise, Becky, thank you so much for doing this. As always, if anyone has any questions about anything after this, please feel free to email me at smohan, SMOHAN @prcno.org. And I can certainly connect you with Becky. I think you guys all have her contact information. It was on one of your slides.
Right, it's on that slide.
But if you guys need any more information about this program, please do contact us. The PRC wants to be here to help. Becky obviously knows about the program. So if you need anything, let us know, and hopefully we will see you all at another class. Becky, thank you so much for doing this. Thank you again to Stephen Richard Parnes for sponsoring our online classes, and we will see you guys at the next one. Thanks, everyone.
Guys, appreciate you attending.
Thanks, Becky.